What's up, guys? Thank you for stepping into Agartha, and in this video we go over types of different asset classes and what the definitions of them are. And then in the next video we go over the pros and cons when it comes to investing. So this is going to be brief, the next one's going to be brief, both of them will come together though. So an asset class are thus made up of instruments that often behave similarly to one another in the marketplace. So the different types of asset classes include cash or cash equivalents, bonds, derivatives, equities, real estate, and commodities, and now cryptocurrencies. So what asset class does cryptos fall under? That's a great question because crypto is actually its own asset class, and we'll go over that next. So key takeaways. So what is an asset class? An asset class is a grouping of investments that exhibit similar characteristics that are subject to the same laws and regulations. So equities, for example, stocks; fixed income, for example, bonds; cash and cash equivalents, real estate, commodities, currencies are common examples of asset classes. There's usually very little correlation, and in some cases, a negative correlation between different asset classes. Financial advisors focus on asset classes as a way to help investors diversify their portfolios. So what are cash or cash equivalents? So a cash equivalents are the total value of cash on hand that includes items that are similar to cash. So cash and cash equivalents must be current assets. So it's just like if you had cash in your wallet or your bank account, how much cash do you have? How liquid are you? Cash equivalents or cash do you have on hand? And then do you have bonds? Bonds are units of corporate debt issued by companies and securitized as tradable assets. So a bond is referred to as fixed income instruments, since bonds traditionally pay a fixed interest rate or a coupon to debt holders. Variable or floating interest rates are also now quite common. So bond prices are inversely correlated with interest rates. When rates go up, bond prices go down, and vice versa. So when I was at Fidelity, they give us an example of like a seesaw. When rates go up, bond prices go down. So bonds have maturity dates. Think of them as just like loans. Loans have maturity dates, just like bonds, at which point the principal amount must be paid back in full or risk default.
If you're new to crypto, or if you've been in crypto for a while and you still don't feel like you have a strategy, then we have the perfect thing for you, because it's one thing to have a strategy, but it's another thing to automate that strategy. So what we're doing right now is a waterfall flash sale. This is the start of week 1. We just launched our Stargate automated experience, which gives you access to utilize our custom automatic trading bots that we built for XRP, XLM, HBAR, Algorand, and a bunch of other altcoins. If you're sick and tired of watching the charts every single day, worrying, stressing, guessing about prices and if it's going to go up or down, then look no further than this, because this is the holy grail for any crypto holder or trader.
Then we have the third thing. We have derivatives. Derivative is just a contract between two or more parties whose value is based on an agreed upon underlying financial asset, index, or security. Futures contracts, forward contracts, options, swaps, warrants are commonly used derivatives. Derivatives can be used to either mitigate risk by hedging or assume risk with the expectation of a reward, so speculation. It's just basically a financial instrument that derives its value off of something else. So equities would represent the value that would be returned to a company's shareholders if all the assets were liquidated and all of the company's debts were paid off. So we can also think of equity as a degree of residual ownership in a firm or an asset after subtracting all debts associated with that asset. Like owning equity in a house. Say you put 50% of the money into a house and the bank lent you 50% of the money for the house. Say you're 50% equity owners of the house. Same kind of situation with stocks. If you own 100,000 shares out of a company that only has 200,000 shares issued, you are a 50% equity owner. So we can also think as equity as a degree of residual ownership in a firm or an asset. So equity represents a shareholder's stake in the company, and it's identified on a company's balance sheet. And then we have real estate. So a key way to make money in real estate is to become a landlord of a rental property. And flippers buy undervalued real estate and they fix it up and they sell it for a profit. And there's also something called a real estate investment trust, or a REIT, and it provides real estate exposure without the need to own, operate, or finance properties. Keep that in mind, because as we get into crypto, now we have metaverses and we can buy real estate lands in the metaverse and on blockchain gaming networks, where now we have NFTs, which you'll learn all about, coming out with real estate investment trust characteristics. It's like all these worlds are being combined, and it's going to make a ton of sense, and everything's going to come full circle as you go through all these programs and reach these different worlds of Atlantis and Olympus and Pangea, then the metaverse. Once you go through all these, you're going to be an expert. So then the last asset is commodities. And commodities is a basic good used in commerce that is interchangeable with other commodities of the same type. So commodities are most often used as inputs in the production of other goods or services. So investors and traders can buy and sell commodities directly in cash markets or via derivatives such as futures and options. And owning commodities in a broader portfolio is encouraged as a hedge against inflation. So commodities, gold, silver, and it said here that commodities are most often used as inputs in the production of other goods or services. Silver with microchips or oil with basically everything. Those are the basic definitions of all of the different asset classes. And now we're going to dive into the pros and cons of them for investing purposes. So I'll see you in that one.
Are you sick and tired of just stressing and guessing, holding and hoping, and watching the crypto market go through its ups and downs and not doing anything about it? If you're someone in that position, then look no further than the Stargate automated experience. We just launched it and we built custom automated trading bots for XRP, XLM, HBAR, and a bunch of other utility coins. If that sounds of interest to you and you want to learn more, click the video below and I'll see you over there.